Hey, what's up guys? Welcome back. So it looks like we finally got some clarity on the results of the American elections, and it looks like that Joe Biden will be the next president of the United States. And I know this news will make some people happy and some people sad, and if you're happy about it, then congratulations. If you're sad about it, well then wait 4 years, right? We do, however, have to move on because life does indeed go on. And today we're not going to talk about the election anymore, but instead, I think it's time I give you guys an update on the state of my portfolio as of November 2020. So without further ado, let's jump in. Quick pause before we begin. Right now you can get a $10 bonus if you sign up and trade your first $100 with Wealthsimple Trade. As well, if you prefer something more automated, you can sign up for Wealthsimple Invest, and the bonus for that is $50 when you deposit and invest your first $500, and links for those are both down below in the description. Now today we're not going to talk about every single stock that I hold in a lot of detail, and that's just because I've already made individual detailed videos about pretty much all the stocks that I hold in my portfolio. So if you want to check those out, just click on my channel down beneath and scroll past to my older videos, and you can see my detailed analysis surrounding each stock. So today I'm just going to quickly run through them. And before I do that though, let me just briefly talk about my strategy as a whole going forward and what my thought process is. So I think recently the attention has been taken up by the election so much that many of us have forgotten that we're still in the middle of a pandemic. So in fact, if you look at cases of the Roni, the new daily infection rate on the US is going crazy, right? It's just shooting straight up. And I'll show you what the chart looks like right now, and you can see that in terms of daily new case averages, the US is at all-time highs. And the same is true here in Canada as well. So in fact, if you look at the new infection rate all over the world, it's at an all-time high pretty much everywhere. So I'm talking about places like France, Germany, and remember how bad things were in Italy when it first started? Well, Italy's new infection rate is through the roof once again. And furthermore, Dr. Scott Gottlieb, the former commissioner of the FDA, has said that the actual new infection rate could be as high as 500,000 per day. And this is just because it's spreading so fast that they can't catch most of the new cases, and a lot of the times people don't get tested until it gets really bad, until they start showing symptoms, right? So my point is that it's good to exercise some caution going forward into the stock market, because that I do see a lot of risks out there still. And the situation, if the situation remains dire as it is now, by the time that Joe Biden takes office in January, well, we might see some more aggressive federally led efforts to shut down the economy in an effort to curb the spread. So what I've done in my portfolio is that I've really tried to consolidate some of my positions around a few core positions and focus on companies that I really believe in the long term, and limit the amount of spec plays that I have going forward. So you'll see what I mean in a sec. But first of all, let me just go to the main metrics up at the top, right? So my portfolio is held within RBC Direct Investing, in case any of you are curious as to what platform I'm using. So if you compare my trailing 12-month return to what it was in the last video, unfortunately the number did go down by quite a bit since the value of my portfolio sank slightly since the last update. However, I'm still at over 80% trailing 12-month return, which is not too shabby if you ask me. So if you put your money into an index fund or something, I guarantee you would not get anywhere close to an 80% return in 12 months, right? So in terms of total portfolio value, we're sitting at around 46,000 US dollars right now. Here today. So I did briefly cross the $50,000 mark a month ago, but it went back down below that 50,000 mark. So it's just been a level that's been pretty hard to crack for me, to be honest. But you know what? You just got to be patient with these things sometimes, right? So if you're a long-term investor, you're not always going to be able to catch the top of the market and sell out at the top of the market and then buy back in at the bottom of the market, right? It's really hard for you to time the market. So some days you might take a step backwards actually, and it is what it is, right? So anyways, without further ado, let's jump in. So my first position in my portfolio is Slack Technologies, ticker symbol WORK. So currently I have 50 shares at a cost basis of $25.44, and currently we're up about 6% on this position. Now I still do have those call options, so if you remember me making that video talking about buying the call options, and for those call options I'm just about break even, so I think I'm down ever so slightly on those, but yeah, I'm just about break even on those call options. Now you guys know what Slack is, right? So in case you don't know, it's a communications tool designed for the workplace. and it's really meant to be a replacement for email. So in fact, I use Slack for work on a daily basis, and I can tell you that it's so much better and quicker than just using email. So I never check my work email anymore. I have like 500 unread emails at the moment. Honestly, like email is pretty useless to me at the moment. So the biggest competitor to Slack is of course Microsoft Teams. And if you ever use Teams, it's a very similar experience to Slack. And to be honest, I think that the market is big enough for both Teams and Slack to coexist. And obviously some companies will prefer one over the other. But if we're just talking about how many other companies are super reliant on email still as their primary means of communication, I think that the potential for growth for Slack is huge. For example, back when I was a co-op student at Loblaw and RBC, both Loblaw and RBC use email and Skype as the primary means of communication. And for those of you who used Skype before, you know what I'm talking about, right? Let me just say that Skype is it's not good. Let me just say that. So I don't know if they still do use Skype and email as their primary means of communication, but in my opinion, Slack is a lot better if they would switch to Slack or Microsoft Teams. So anyways, that's Slack. Moving on, next up we have Visa, ticker symbol V. So this position is unchanged from last time. So I still have my 7 shares at a cost basis of $201.70 per share, and we're just about break even on this position as well. So I won't spend too much time on this one because my opinion of Visa has not really changed since last time. I'll just reiterate that I do think that it's still a great long-term hold, seeing as the world is going more and more cashless these days, and Visa is one of the most dominant players in the cashless payment space. I do think that is a very solid company, and it's just going to grow very slow and very steady. So I'm just not really interested in selling this stock anytime soon. And in fact, if the price dips, I might consider picking up more shares of this stock. Anyways, I'm just going to leave that there. Next up, we have Stratasys, ticker symbol SSYS. So I have 100 shares of Stratasys at a cost basis of $14.83, and currently we're down about 6% on this position. And for those of you who don't know what Stratasys is, it's a 3D printing company. So I know there's a lot of 3D printing companies, out there these days, and I often get a lot of questions of people asking me, why Stratasys, right? Why not Proto Labs? Why not Desktop Metal? Well, the reason why I picked Stratasys as opposed to anyone else is because from a valuation perspective, it does look like that Stratasys has a relatively low valuation. So it's currently trading at a price of sales of 1.36 and a price of book of below 1. Now the forward peak looks kind of whack just because the company has not been profitable recently, so analysts are probably not expecting very much in terms of earnings in the future for this company. However, let me just say that Stratasys has been in the game for a long time. In fact, I think the stock has been publicly traded since all the way back in the 90s. So they've definitely got the experience to navigate the industry. So I just think that Stratasys is a pretty good bet on the emerging 3D printing market as a whole. And keep in mind, this is not a big position at all, so it's kind of a spec play, to be honest, and at the moment we'll just have to see where it goes, right? I think that if the 3D printing industry succeeds, then Stratasys will do well, and if 3D printing never really catches on, well, it doesn't really matter which 3D printing company you invested in. None of them will do well if 3D printing doesn't really catch on, right? So I think that if I'm right, and if 3D printing really does take off in a major way, I'm talking about 3D printing for industrial uses, by the way, not for like home use, right? A lot of people were talking about 3D printing for home use, and I think that never really took off, and I do think that in the future for industrial purposes, 3D printing is the way to go. So yeah, if that really takes off, then I think that no matter if you're invested in Proto Labs or Desktop Metal or Stratasys, I think that they'll all do really well, but we'll have to see where it goes. Anyways, that's Stratasys. So next stock on the list is Berkshire Hathaway, ticker symbol BRKB. Now I own 15 shares of BRKB at a cost basis of $212.18 per share, and we're almost at break even at this point. We're down slightly at the moment as well. And you guys know what Berkshire is, right? It's Warren Buffett's company, and it's a huge conglomerate that owns a lot of different brands, and they also have significant stakes in a lot of different companies, most notable of them being Apple. And actually this position is a lot smaller than what I like it to be, so I'll probably add to this position very soon. And considering what the stock is trading for right now, I just think that this is one of the last truly great deals left on Wall Street. So if you're looking at the stats, you're getting a chunk of a diversified list of great companies, and you're getting a legendary management team led by Buffett himself. And all of that is currently trading at barely above a price to book ratio of 1. So I just think that this stock looks really undervalued, as I said, and I'll probably add to it very soon. So that's Berkshire Hathaway. So moving on though, the next stock on the list is Taurus Acquisition 2, ticker symbol SNPR. And these are units of a SPAC. So if you recall Taurus Acquisition 1, that was the company that brought HYLN to the public markets, right? SHLL. And yeah, basically the same guys that made Taurus Acquisition 1, they went ahead and made another SPAC called Taurus Acquisition 2 once the HYLN deal closed. And these are units rather than shares. So a unit includes one share and a fraction of a warrant. So if you have no idea what I'm talking about, I actually recommend you go and watch the video I made explaining what a SPAC is and how this stuff works. So I won't bother explaining everything again here. I'll just assume that you watched that video. But essentially, I'm in the process of getting these units split into shares and warrants. So once that split happens, I can sell my shares and keep the warrants. So essentially, by buying the units before the split happens, it's an opportunity to pick up some warrants almost for free, essentially. Alright, so we'll have to see what company SNPR decides to merge with, because this is a pre-merger SPAC and they haven't announced what company that they're merging with. They're still searching. So if they do find a good company though, the warrants can be worth quite a bit. So that's SNPR. Moving on. So next thing I'm going to group together, and it's Facebook and Microsoft. And basically, there's no change for these since my last portfolio reveal video. You can see that the cost basis and whatnot is all there and it's all the same. And really long-term, they're long-term holds for me because they're also core positions in my portfolio. So these are stocks that I have no plans on selling no matter what happens, unless something crazy happens with each individual company, but I highly doubt it. So obviously, I don't have to tell you that these companies are beasts, right? And they're basically just money-flowing machines. And, although you can argue that the valuation on big tech is kind of high at the moment, in my opinion, there's really good reasons for that, right? Because if you just bought a ton of Facebook and Microsoft right now, and I'm not saying that you should, this is not financial advice, by the way, but suppose that you did, right? So suppose that you bought a bunch of Facebook and Microsoft shares and you just sat on them for like 10 years. Well, then I have a hard time believing that you won't make money 10 years from now. And that's just a fact, right? Whatever price that you bought in right now, even if you pick the worst time, right? Even if let's say you bought Facebook at over $300 per share, well, I have a hard time believing that you won't make money 10 years from now. So yes, I'm up a lot on these positions at the moment right now, especially Facebook. I think I'm up like more than 50%, right? But I'm not selling. All right, so next up we have HYLN, ticker symbol HYLN, and I have 325 shares of HYLN at a cost basis of $24.51 per share. And what can I say? This one has just been a roller coaster of emotion, right? So obviously, it's been a highly talked about stock, and I've held it since it was SHLL, and I rode it all the way from $50 a share and just saw it crash through the floor, and now it's at like $20 a share or something like that, right? So yeah, with these highly speculative stocks, that's just the way it is sometimes. But in my opinion, I still personally believe in the company a lot, and I do like the company long term. So I really like the business idea, I like the management team, and I think that the main issue for them right now is just that whether or not they'll be able to execute properly on their plans. So right now this company doesn't have any meaningful revenue, never mind profits, so how much this company is worth is really up to the court of public opinion, and I think that that is a major contributing factor to why the stock has crashed so much. But from my perspective though, I do like what I'm seeing so far. So yes, it is kind of a risky bet considering that HYLN is taking up a rather large proportion of my portfolio right now, but I do think that long term there's a lot of growth to be had. So I won't go through my full bullish thesis on HYLN. Again, if you want to check out any videos where I talk about HYLN, I talked about them a lot in past videos, so yeah, just scroll past some of my older videos and you can check those out if you want. Anyways, that's HYLN. And last but not least, I have to talk about the biggest position in my portfolio right now, which is of course Tesla, ticker symbol TSLA. Now you guys know all about Tesla already, so I'm not going to waste time talking about it again today, but I just want to say that I did add 5 more shares of Tesla, which brings up my total position size to 40 shares, which also dragged up my cost basis, by the way, to $138.11 on a post-split adjusted basis. And yeah, it pains me to increase my cost basis so much, but that's just how it is sometimes, right? Anyways, if the stock does fall below $400 per share though, I'm definitely interested in adding more to it. And in fact, my goal is to get to 100 shares in total. So I think that even now Tesla has a lot more room to run. And quite frankly, I'd actually be surprised if Tesla isn't the next $1 trillion company. So I think that at today's valuations is trading at around like a $400 billion valuation right now. So I do think that Tesla will get to $1 trillion sometime in the next probably 5 years. So you're looking at like a 2.5x potential with Tesla stock, and that's not financial advice, by the way, that's just my opinion. So, I could be wrong, but I do think that Tesla still has a lot more room to run, like I said. So that concludes my portfolio reveal for today, and you can see that I'm up over 40% on this portfolio as a whole, which is nice. But before I end the video, let me just talk about one more thing, which is my decision to sell out of all my shares of Revolve. So in case you're wondering where my shares of Revolve are, it's because I sold it. And the price I sold it at was just over $21 per share. So given my cost basis of around 19 and change, I think I made around like a 10% profit or so on it in the end, which is quite a bit. It's not a lot, but like it's a decent amount, right? So the reason why I sold it though is just because I don't want to be in like non-essential retail, given what I just said about like Roni's situation going crazy. I do think that non-essential retail is probably a dangerous sector to be in at the moment, given the situation. But long term, I still believe in Revolve, and I do think that it's still a good growth company, but I just kind of want to limit my exposure to the retail environment at the moment. But with that being said though, if we do get prices like we saw back in March, I think it hit like single digits at one point back in March, right? So yeah, if it hits like prices like that ever again, I'd definitely be interested in potentially buying it back. So yeah, anyways, that's my entire portfolio as of November 2020, and I'll leave the video here. Be sure to hit the like button if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye!